goes into open houses and you see a home that you potentially like, thinking that this would be great, but I know I'm going to need to do a ton of work about this home, and how am I going to finance it? Or are you a homeowner who's thinking, I want to make a major change to the home, but how do I finance it? What are some kind of issues around that? So, Rick, I wanted to talk to you about some financing options. One, for a buyer, how do they take that fixer-upper and finance it to make it better? And for the homeowner, what do they do about if they want to have a major job?
Yeah, so you've found the property that the home of your dreams. However, you're realizing that you don't have quite enough money post closing to fund the cost of those renovations. So what do I do? How do I do this? How do I accomplish this? And that's through a renovation loan, which is offered by some lenders. Some banks are able to do that, where you're buying the property, you've got an acquisition cost, and then you are adding cost of improvements to that number. So you've come to an agreement with the seller on price. Okay. Next step is to bring a contractor in to give you an estimate. We order an appraisal. Okay, the appraisal is done based on the improvements. So the after value once the improvements are completed. So you are basically putting your down payment based on the sum of the acquisition cost plus the cost of improvements.
Oh, okay. So if you're doing like a 10% or 20% down payment, are you ending up putting more down?
You can actually we have renovation loans where you can put as little as 3.5% down. So, for example, if you're buying a home for $500,000, you need to do a new kitchen, let's say a new master bathroom. Let's say $100,000 is going to be the cost of improvements. So your acquisition cost is $600,000. You can finance up to 96.5% of $600,000. So effectively putting 3.5% down, you're getting, you're having the ability to finance those costs or those renovations.
Okay, so it's kind of the how do you go about actually fixing up a fixer-upper by just taking out a loan like that. So, and if you're a homeowner who currently has a home, would they also be eligible then for a renovation loan, or should they be looking into home equity?
They can look at both. They can look at both. I think a lot of that is dependent on their current equity position and whether or not they have enough equity to pull a home equity line of credit, because a lender or a bank that is providing a home equity line of credit is looking at existing value, not value based on after improvements.
Oh, okay.
So that is one option. If the equity isn't quite there to cover the cost of those improvements, a renovation loan would be a better option.
Okay, so there's a way to go about doing it if you want to. All right, well, thanks, Rick. That was very helpful. If you have any questions, please go ahead and put them in the comment section below, and we'll get back to you. Please like this video and share with your family and friends. Thanks.